Okay, so big news today happening for Meta. Meta decided to switch to become a supplier instead of a consumer in the age of AI. So they had big news about developing a cloud infrastructure business that will sell access to AI compute. That's huge, guys. And aims to compete with Amazon, Microsoft, and Google per Bloomberg. Once they mention that, boom, you'll get to see the stock of Meta just going up very fast. Now it is, I don't know if that's a take profit or people just don't care about Meta that much, but the bigger picture is not Meta. The bigger picture is software in general. So I made another video, mentioned that Micron, the AI trade, memory, they've been taking too much money from the market, and it's not going to keep going forever. Like, if you believe that, that's a problem, and you can watch that video and make a comment there about this. But for now, there's some rotation going on. We know that software was just tanking forever, right? Like, it felt like it's going forever. If I'm going to be taking a look at now, it just looks very, very bad. It has been going like this for so long. You could be like, okay, I have no idea what is going on for this. This company is collapsing. But you can see that at the end, it started creating this nice, inverse head and shoulders for people who like to pay attention to this. I'm one of them. I think it's very interesting. Speaking of that, if I see this reaching the levels of the 130s, I'm going to be keeping a very close eye, because if we break above 140, this is a huge support resistance. This is a very interesting level. But if we break that, definitely I'm going for the 180 up to, the 190. That would be a very, very nice trade if you wait here and go all the way to the 190. That's 40%. And I am actually in the trade for now. Literally, I'm now for now. And I'm keeping the trade open through this week. Probably I'm going to be looking at it Monday and see where we at. If we're able to break above, if I'm going to go switch to the daily, we have a huge level here. This is going to be a huge resistance around the 110. If we break that with some strength, I'm staying there. And my next level to watch is the 125. But if I see it collapsing again, going back to the 90s, then I'm out. Then nope, everything is invalidated. But this was some really interesting technical analysis. And all the other oscillators or whatever you want to be using, all the indicators are supporting. But I still want to focus on the bigger picture, because again, markets do not move based on one thing. They move based on multiple things, because humans need multiple things to affect their decision, and markets are nothing but a reflection of the majority of humans who are in the market making decisions in one direction. So the other thing is the spending. We know that companies that spent so much money on AI got punished by the market, and companies that produced AI, they got rewarded by the markets. So when we saw Microsoft have a great earnings report and Meta having amazing earnings report, but both of them mentioned that their CapEx, capital expenditure on AI, is booming, the markets punished both of them. Now we see Meta switching it like, hey, we actually have extra AI compute. Please use it. The market rewarded them. But this is for software, but we also have other software that had a different problem. The problem of replacement. We know that AI is so good at replacing everything, and number one is software. Your speaker is actually in software. This is my lifelong career. I'm a software engineer. So I'm so in deep into this, and I understand this very, very, very well. The pain that comes from these stories about AI replacing everybody, specifically software, and it did affect the market. So you have seen all these software companies, like you have Now, you have Oracle, you have let's just take a look at the IGV. it just makes sense. They're all moving at the same time. Everybody here, AI is replacing software. Software is bad. Stay away from software, blah, blah, blah. And it just cannot really bottom anymore. We're seeing a bottom happening now, but I'm just talking about what was happening in the last 6 months. Oracle, very bad. If I'm going to be taking a look at Adobe, probably the worst. But Adobe is a very different company. Adobe is they could be easily replaced. Other companies, no. Now is a very interesting company because Now and Oracle and Meta and Microsoft, if you're going to consider both of them as software, they have a better circumstance and a better potential than Adobe, for example. But overall, software is doing well. And I'm seeing a lot of other analysts. They're turning their view on software to become bullish. So it seemed like there's this rotation consensus happening that, hey, there might be a rotation back to the orphaned kid software that has been getting bullied and hated on for so long now. Maybe they should get some love. Maybe we know that AI is not really replacing everything, specifically software 100%. Maybe actually companies will use AI, software companies, to make their workflows, this is the keyword, workflows, better. Maybe they can actually make more money. And Now had really great reports, so financially it's good. Also, AI seemed to be kind of stabilizing. We're seeing some really, really stupid movements from Anthropic and OpenAI. Of course, it's another company that doesn't really act so smart. Both of them want to have an IPO, but they're supposed to be like the LLM/AI. I don't know. Here we go. Fable is back. The Fable drama. That's a very different topic, and it's some BS by Anthropic just to make people really looking for this model. And I'm telling you, I'm in the software field. It's not AGI, guys. That's nothing. It's just another LLM with extra thinking tokens. Let's focus more on software. It seems like there is a rotation happening. Like I told you, I'm personally in Now for now. I think I might keep it for another week, the trade. I already made some profits. I made like 2%. I got in at around 102, something like that. Keep an eye on Now. It should be good. Other software too should be pretty decent. DDOG, DDOG is actually not bad. But I like Now the most because there's a lot of volume in it. There's a lot of people who talk about it. And the volume is pretty decent. I like to be in stocks or ETFs or whatever that have high volume. Yeah, some people might be afraid of it because of the volatility, but I like it more because it's easier to gauge the sentiment when you have a lot of people trading the same thing. And this is something I really pay attention to, the sentiment of the markets. Right now, there's a very, very positive sentiment about Now. You have Guggenheim, more analysts now are turning to buy from neutral. It is very positive sentiment for Now. So I'm feeling good about it. Let's see what's gonna happen next week regarding Now. And for now, please subscribe.